Hey guys, Taylor with GammaEdge here, coming at you with a 5-minute recap for June 24, 2025. Had a bit of a gap and go today. Levels played out exactly as we wrote up in the pre-market. That being, we held the key 60-60 level, traded up to 60-85, which is target 1, 60-100, which was target 2. This was all outlined for you in our pre-market video that we have on YouTube. Did that live this morning, also in our pre-market prep in the Discord. So with that, we're going to quickly go through the pre-market prep. Feel free to watch the video for more in depth just on how we got those key levels in the intraday tools that helped us trade and capture this move. All right, so here's our SPX 0DT dashboard from this morning. Couple things to note, we were implying the open up around 60-70, which was, that 45-point gap up from where we settled the prior session. A few things to note: our drunk consider range that was from 50-25 to 60-25, 59-85. Just quickly, if you're not familiar with who GammaEdge is or what that transition zone is, if you go to our website, GammaEdge.us, go to newsletters, our education, we just posted a deep dive this weekend on that. And then if you go to our blog, we have all the articles we've written this year, then free courses for you. GammaEdge framework, this one right here is our entire trading methodology given to you for free. So going back to this with the implied open around 60-70, which we knew there's this huge structure here at 60-60, 55, 60-60, which was going to be kind of our key reference point to the downside. Just given the distribution of speculation based off the pre-market positioning, we knew that 60, 55 was a key level to the downside that we wanted to see hold. Then to the upside, 60, assuming that held, 60, 85, again, just a ton of speculation at that level, going to make that a key level. And then 60, 100 was kind of our top for the day. Reason being, again, the distribution of speculation at that level and it just being around psychological level. One thing that we did note in the pre-market was there was a lot of charm support underneath us to start the session. Why is that? Well, because we are gapping up and opening so far from the middle of our transition zone. So we were in a heavily call-dominant environment where a lot of those calls that were placed out of the money into the close yesterday are now in the money. So, those were decaying from 0.5 to 0 and now in the money. Now they're limiting from 0.5 to 1 because they're now in the money. So those are supportive so long as those are not monetized. So what we were saying by this comment, thin air up here, need to see the incremental call speculation come in. It's exactly that. The risk here is that we do see a monetization event. So we want to see that call speculation continue to propel us higher, or at least just not see evidence that calls are being monetized. Because if we did see that, then that would introduce selling pressure. And then that is where our key levels of reference come in. Do we lose 60, 65? Then do we lose 60, 30, so on and so forth. But they're pretty cool, right? Price action today, bit of a gap open, held 60, 60 almost to the penny. That's what this gray box is, a 60, 60, 60, 55 tongue twister. But anyways, then once we held that, we pretty much just traded straight up to 60, 85, which was target 1, and then 60, 100, this was target 2. And then for what it's worth, here was my trading screen from today. You can just see those entries that were made, got chopped up a little bit in the morning, but that's okay. I was just trying to get in because I did not want to get left behind if the train was moving higher. Keep in mind that this is the MES chart. So if you're thrown off by the scale, that is why. But nonetheless, you can see here we got an entry right at the opening print of the day. Obviously, the thought was moving higher again. Again, this exit right here was at 60, 85 on the SPX chart. And then this exit right here was close to the 6100. I think it was 60.95 on the SPX chart. And the only reason I bring that is just to say that, we're just not providing you with education, information, a place for you to learn, right? You're unlocking something and we're there with you, trading money with the information and the tools that we are giving you guys as well. So as I say, we are in the arena with you guys. Anyways, getting back to kind of a core intraday tool that we use here. This is our intraday volume analysis called the vol im command. Simply put, what we're looking at is we're looking at the momentum of SPX 0DT options throughout the session, both on the call side and the put side. For those math nerds out there, what we do is on a 5-minute over a 5-minute basis, we aggregate the distribution of, we aggregate the volume of calls and puts. We find that distribution. We find the middle of that distribution, which is called a centroid, and then we plot that. So every 5 minutes, we plot, connect the dots for you, which are these solid green and red lines. And that forms a trend. So from the open to any point in time, we can understand what that trend of the centroid is doing. And by doing that, we know two things. One, what the character price action is, and two, what the projected path of the centroids are through the close. Because if we know that, then we know where price may go or may not go, because price follows where centroids are going. And again, just so you know, we have a whole article on intraday volume analysis on our blog, so feel free to check that out. So, right, coming back from today, really the thing that we were talking about is if we were going to move higher, it's going to be a slow, methodical grind. Reason for that is the call speculation was really just not ramping higher at all. It was more or less just kind of flat on the session. But on the flip side, the put side was not breaking down at all. That was trending higher as well. So that kind of told us, hey, probably not going to have a waterfall lower on the day. And then what was most compelling on the day, to me at least, was this linear day higher via our market trend model. In linear day higher, what does that mean? Simply put, that just shows sustained buying throughout the session via the cumulative tick, which is just based off the tick index, and then our filtered tick, which is a measurement of large buying and selling, which is showing sustained buying throughout the session as well. 52-week highs versus new lows trending higher as well. So yes, intraday volume analysis was not as enthusiastic as I would have liked it to have been, but intraday buying was certainly there. We had charm support under us all day, so made a lot of sense for reasons of why to try to ride that move higher. And even if you didn't want to get directional to the upside, right? Like you could have used the tools knowing that 6100 was a key level to the upside. We really weren't seeing any speculation higher than 6100. So, you could have sold premium above 6100. I know people in the community did that. Or, you could have been selling premium below, price action as those kind of dips were being bought. Just kind of two ways you can go about it. A lot of people in the community sell premium. I trade directional futures. So, multiple ways to use the tools, multiple ways to skin the cat. Just so you understand the utility of this intraday volume analysis tool, I know that we showed you the end of the day snapshot, but here this is what it looks like as an example at 1250. So we have all this past data. We're projecting out where those centroids are headed into the future, right? So again, very useful indeed. Then, right, keep in mind that these endpoints are going to tighten up generally as we get closer and closer to close. We get more data points, but it's often a very good path. Assuming all else equal, right? If there's a news event, some kind of news, something like that, obviously, no tool is going to understand what that exact reaction is going to be. But, under normal market conditions, this is a excellent tool to be using intraday along with the market trend model and our levels. And so with that, that's all I got for you guys tonight. You should understand, pre-market prep, how we got those key levels, how we're monitoring what the intraday, price action flow, all that good stuff is doing, and then ultimately how that manifests into multiple successful trades on the day. Last thing would be remiss if I didn't show you that this stuff works on single stocks as well too, right? Like these levels, transition zones, all that good stuff that we're talking about at SPX 0DT. I know we hit on that most days, but that's because a lot of you guys like to trade that stuff. But look, it works on individual stocks as well. Looking at Google here, P-trans level price was just, oscillating around that all session. Same thing with Apple, had a little bit of a bounce off P-trans, but, isolated right around that 200 level. Tesla, COTMP, was glued to that level all day today. Goes on and on and on. Sometimes like in Amazon, it's just in the middle of the two zones. So that's information in itself telling you it's kind of in no man's land. Right, Microsoft couldn't break free of plus Gex, so right, it goes on and on and on. And yes, not every stock is going to be at a level every single day, but if there's a specific stock that you're interested in trading, then it is useful to understand where it is in relation to these key levels. Because right, these are market generated information based off of actual positioning in the market. And yeah, sure, some people only want to do technical analysis. That's fine. Don't want to put up the work in to understand modern markets and how they are constructed today. But, I would challenge you, just look at these levels for a week and you're going to see the utility of them. Last one, like Hood, look at this up here. It just perfectly touched plus Gex and perfectly topped out at COTMC, like great profit taking level. Not familiar with that? Would have been incredibly useful on an intraday basis. Instead of guessing where to take profits, you had two great profit levels to use. And again, coin, right? Coin, if you get in here or wherever, no idea where you got in, but if you have clueless on where to take your profits, no good profit taking levels, and this COTMC, right, generally offers a very good upside target. So right, that's enough beating the dead horse. You guys get the point. You guys can either use the information or not. I'm just here simply to present it. Hopefully it helps you with your trading. But with that, appreciate the time tonight. We'll see you all tomorrow. Thank you. Bye.